Dr. Sharma again. Welcome back to my video series. This is the part 4 of the recording of transaction. In this fourth part, we are going to talk about the unadjusted trial balance and its use to locate errors. So first, let's understand what is a trial balance. According to double entry system of accounting, each debit must be followed by a corresponding equal amount credit entry, which essentially means that if an individual debit must be equal to an individual credit entry, then the total entries must be equal to the total of credit entries. So that's the fundamental logic of looking at the duality concept or the double entry system. So now to check whether all debit entries have the equal and corresponding credit entries, we prepare a statement which is known as a trial balance. So essentially we are preparing the trial balance to check the arithmetical accuracy of the entries that we have made. The individual debit must be equal to individual credit. So therefore the total debit must be equal to the total credit. If they are not equal, then there could be some errors. Now, the objective of preparing a trial balance is to establish arithmetical accuracy of accounting up to the point. Now, why we're using the phrase up to the point? Because we prepared three different trial balances. So, the first trial balance is the unadjusted trial balance. So the unadjusted trial balance is prepared once we finish the general posting of the journals. Second is the adjusted trial balance that is prepared after we have completed the adjustments and the adjusting entries are posted. So first checkpoint is the unadjusted trial balance, the second checkpoint is the adjusted, and the last one is the post closing trial balance. So these are the trial balances we prepare, and each of them are trying to establish the arithmetical accuracy of accounting up to the point when we are preparing those trial balances. So another objective of trial balance to locate errors in the accounting entries made. If the duality concept is to be followed, then the total debit must be equal to total credit. If they are not, then there could be some errors. Now, of course, you should be aware of the fact that if it is unintentional, then only we classify them as errors. If somebody is making a mistake with the intention to deceive, that is a fraudulent behavior. So that's a fraud. It's not an error. Next is the objective of trial balance is to facilitate preparation of financial statements. Now, how does it facilitate the financial preparation of financial statement? Because by preparing a list of all accounts uh, that has a balance, what we do is we can have a list of that balances. So therefore, we can use it to develop our financial statements. So that will help us prepare the financial statements. Okay. So, as I said to you, an unadjusted trial balance is the first checkpoint in the equality of debit and credit. It's distinguished from an adjusted trial balance and a post closing trial balance. Those are the other two trial balances we will learn to prepare. That's adjusted trial balance is the next chapter, and post closing trial balance is the following the next chapter. So, we'll be talking about them again. The other two are prepared in later chapters and will include additional information. And as I said to you, we'll be talking about them. Now, next item on the agenda is to take the steps in preparing a trial balance. As you can see, in the first step, we are going to look at the list of the name of the company, sorry, not the list, the name of the company, the title of the trial balance, whether it's unadjusted or adjusted. And usually, when people write trial balance, it is considered as unadjusted. So if somebody writes trial balance, it's understood it is a unadjusted trial balance. If you are preparing adjusted trial balance, usually we try to signify that okay, it is an adjusted trial balance. Okay, so that is your step number one. In step number two, we'll list the accounts from the ledgers and enter their debit or the credit balance in the respective columns of the trial balance. So as we have learned in the previous part of the video, that we prepare the ledger accounts and calculate the balance. So some accounts have a debit balance, some have a credit balance. So whichever account has a debit balance, we will be writing in the debit column, and accounts having credit balance will be writing the amount columns in the credit column. And of course, we'll be listing the accounts in accordance to the chart of accounts. So as I said to you, chart of accounts is the list of all accounts. While preparing the trial balance, we usually try to follow that chart of account. Then the step number three and step number four happen together. Total the debit and the credit columns of the trial balance and verify whether the two totals are equal or not. If they are not equal, then we consider that to be a disagreement of a trial balance. So let's revisit the demonstration problem that we had taken up in the previous segment of the video, part of the video. So it's the same problem with Suman Enterprise. We have already done the journal entry. So these are the complete journal entries. And then we did the ledger account. So these are the complete ledger accounts. As you can see, all these ledger accounts have a balance. Like cash has a balance, debit balance of 90,940, and then office supplies has a 1,700 debit balance. Accounts payable has 2,100 credit balance. Common stock has 80,000 of credit balance. Dividends has 3,000 of a debit balance. Sales revenue has 37,500 credit balance. Office rent expense has 9,600 debit balance. 7,000 is the office salaries expense, again on the debit side. Office equipment expense has a debit balance of 3,160. Office supplies expense has a debit balance of 2,600. And finally, we have the miscellaneous expense of 1,600. So now what we are going to do is we are going to go step by step. In step number one, what I had said to you was you list the name of the company, the title of the trial balance, and the date the trial balance is prepared. Now, for clarity purposes, I have written unadjusted trial balance here. Now, even if I don't write that, it is understood it is an unadjusted trial balance, even if I just write a trial balance. That's something that you have to understand. And if you want to write unadjusted trial balance, it's absolutely fine too. So we're writing the name of the company on the top, then the name of the trial balance, and the date for which the trial balance is good for. It is prepared as on a particular date. It's a point of time statement. Then what we do is we list the accounts from the ledger. So this is the partial ledger we have. We have 90,940. So we bring that as a, so you write cash, reference is 10 here, and then 90,940 in the debit side. Please see that. Then you have office supplies of 1,700 again on the debit side. So you are writing 1,700, and this 11 appears to be the reference. Next is accounts payable. It has a credit balance. Because this is a liability account, it has a credit balance. So you can see it is on the credit column of the trial balance. Similarly, we have a credit amount of 80,000 as the balance in common stock, and the reference is 30. So you can see those references made. Dividends is a debit. So we continue till we have listed all the accounts that have a balance. So that is sales revenue, 37,500. So we bring all those balances here. 37,500 is a credit one, and then all expenses have a debit balance. So that is what we are writing here. All expenses are listed here in the debit side, and each reference column is written here. As you can see, we're following the chart of account. um, Assets are first listed, then liabilities, owner's equity, revenue, and then finally the expenses. As you can see, miscellaneous expense is usually the last item to be listed. So that is how we prepare a trial balance. Once you have done the ledger accounts, it's not going to be difficult to prepare a trial balance. Just listing of all accounts that have a balance and put the balance on the side where which has a balance. So all assets will have a debit balance, liabilities have a credit balance. Owner's equity will depend upon which type of account will have a debit or a credit balance. Revenue will always have a credit balance. Expenses will always have a debit balance. So that is how we prepare a trial balance. So now that's we have completed step number one, step number two, and now we're going on to step number three. So we total the debit and a credit column of the trial balance, and we see both the totals are exactly same. So that is the verification part. Verify the total of the debit column equals total of the credit column. Now, if the total does not add up to the same total, then there are some problems somewhere in the either the balancing of the accounts or entries. So it all depends upon what was the error. Now it is a very tedious process to go back and find out the error. Now if the two totals do not add up together, that is known as the disagreement of a trial balance. The state wherein the totals of the debit and the credit column of a trial balance are not the same, it is known as a disagreement of a trial balance. So the trial balance total have not disagreed, have disagreed. So that means there is a disagreement between a debit total and a credit total when they are not equal. It's usually because of some errors that have been made either while journalizing or posting to the ledgers. Now, these are some of the errors that are possible. So, again, to highlight that unintentional errors are mistakes, and then intentional are to be considered as fraud, and this is a different level altogether. Law enforcement could be involved, or you could even invite a forensic accountant to have a look at your books of accounts if you suspect there is a fraud. But if there is an error, we try to find out what kind of error it is, and then we try to rectify that error. So one type of error is the error of principle. These errors occur whenever there is a violation of fundamental principle of accounting. So when the gap is not followed thoroughly or in true spirit, then it is considered as an error of principle. For example, if you purchase, let's say, equipment, and you wrote off that as an expense, then you're violating the principle because equipment is supposed to give you a long term benefit and therefore to be classified as an asset, not an expense. Next would be error of omission, as the word suggests. Omission means you have completely or partially omitted to record in the books of accounts. Error of commission could be you have committed some errors by making wrong entries, wrong posting, or posting on the wrong side, wrong totaling, or a carry forward, or you have just what you call entered the same transaction two times. So that will be the error of commission. Now, some of these errors, of course, um, these errors are basically clerical type of errors, and this is the error of principle. And another clerical type of error can be transposition error. The error is made because you have changed the position of the digit while posting or copying. A sliding error, if the error arises due to incorrect placement of the decimal point, which is called a sliding error. Now, some of the errors could be compensating error. If the error made on the debit side is compensated or neutralized by another error that you have made on the credit side, then that will be considered as a compensating error. Now, usually these compensating errors, errors of principle are normally compensating errors because supposing if you debited expense instead of asset, all assets and all expenses will have a debit balance. So whether you have debited it as an expense or an asset, it will have a debit balance. So the trial balance will agree. So, but you have made an error and it has compensated itself because the effect has been neutralized to zero. Okay, so one of the common errors affecting the trial balance is a transposition error. As I already said to you, you have transposed the order of the digit. Supposing instead of writing 648, you wrote 846, 846. You have the 6, you have the 4, you have the 8, but you have ordered in a different way. So there is a transposition, or you could also write that as 468. So if you do that, that is a transposition error. Another would be a error of slide. The entire number is copied or recorded, or one or more spaces to the right or left, such as writing 1042.60 is written as 104.26 or 10,426. So that's you are sliding the digits well, um, putting the decimal point. So that is making all the difference. Now, the quickest way to identify whether a transposition or a slide error is made is to find the difference. So you just find out the difference of the total. So let's say debit side total is 4,000 and credit side total is 4,900. So what happened is now there is a difference of 900. So that is what I call the difference between a debit and credit. Now then what you do is you try to divide by that 9, and it is divisible by 9. If the difference is exactly divisible by 9, then it indicates either a transposition or a slide error. Now you have to go back to the numbers and really check whether you have transferred. Now this is going to be a tedious process, of course. So, of course, in a computerized environment, you can code your data entry and try to clean up the entry, because it will draw up a trial balance immediately as soon as you type something up, and you will be able to know that you have typed a wrong figure. So that's going to be easier. But if you're doing a manual accounting, it's a very, very tedious process. As I said to you, there are some errors which affect the trial balance totals while preparing a trial balance by, let's say, unusual what you call kind of account balance. For example, since a business cannot have a negative supplies, a credit balance in supplies account indicates that an error has occurred. So that's another way of finding out that as well. So you go back to the concept known as the normal balance we discussed uh, in the previous chapter. So no, we discussed that in this chapter as such. So what we'll do is we will check whether all the accounts are having a normal balance or not. If they are not, then there is some problem somewhere. We rectify that. If an error has already been journalized and posted to the ledger, and now you cannot just scratch out whatever you have done and rewrite again. So what you have to do is, instead of that, you'll have to do a correction journal entry. So that's known as a rectifying journal entry or correcting journal entry. The words are interchangeably used. The British like rectification, and we like correcting journal entry. Supposing, let's assume that on June 5, a $10,000 purchase of equipment was made on cash, and it was incorrectly journalized and posted as a debit to office expense. Now, this is a principal error of principle, because your purchase of office equipment, that's an asset, you're supposed to debit to the asset, because asset will be carried forward and depreciated. Now, if you charge the expense, you're going to reduce the income and therefore maybe paying less amount of tax. And on at the same time, if you don't show 10,000 assets, that means your financial position will be shown as weaker than what it was. So there are plus and minus of doing that, but matter of the fact is that we have violated the gap. So generally accepted accounting principles, and we have to make an correction of that. So the error was discovered on June 30. Before making the correcting entry, the journal entry that was made in error is compared with the entry that should have been made. So that's a three-step process. So by comparing these two journal entries, the corrected journal entry can be determined. So first step is what was done. So that is the error. Office expenses was debited instead of debiting office equipment. So what was done was office expenses was debited, wrongly debited, of course, rightly credited to cash. So there is no problem with that. What should have been done? Office equipment should have been debited. So the cash has been correctly credited, so we don't have any problem with that. But we have a problem with wrong debit to office expense. So if you have a wrong debit to it, the way to cancel that out is to credit it. So we credit that office expense, and office equipment was supposed to be debited. I did not debit it, so now I would do the debit. That's why I debit office equipment and credit the office expense. So that will nullify the error that was made. So, okay, so that's a error correction once we have identified the error and we are able to make that correction. Sometimes it is possible that we found a difference in the total trial balance has not agreed, let's say with $1,200, and then we cannot find what was the error. So I'm in a hurry to close my books of accounts. So what I will do is I will use a dummy account known as suspense account. So debit side is 5,000 and credit side is only 3,800. So what I'll do is I will add that 1,200 on the credit side and use that as a suspense account, which means a suspense account can have both a debit balance as well as credit balance. Now, suspense account is called a dummy account because it is not open um, because of a transaction, but just for a convenience. So that is why it's not based on a real fact of transaction. So that's why we call it as a dummy account. Now, there are other dummy accounts that we'll be revisiting. One is the income summary account. We use it to close our books of accounts. So the system of transferring the difference in the trial balance, of course, is almost gone out of practice because of computerized accounting system. Simply because you can find out that you've made an error as soon as you have made an error. If you're careful about it, you will not have to use the suspense account. So if you have to use the suspense account, then you can still do it, but it has become out of practice. So you don't see a discussion of suspense account in many of the books as such. Okay, so that was the suspense account, and that was about the trial balance. So let's just uh, test the knowledge, and then we wind up the lesson for the trial balance. So now the first is a trial balance is prepared for what? So that is the question. Trial balance is prepared to prove there were no errors made As I said to you, we cannot prove there are no errors were made because sometimes compensating errors could be made, and discover errors that affect the equality. That would be a possible answer. Prove that each account balance is correct, that we can prove that no errors were made, again that we can't. So that's why best possible answer is number B. So that is how we answer that question. Now the next one is, of course, a proof that the amount of the debit equals the dollar amount of the credits in the ledger means. So that means if the trial balance is in agreement, what does it mean? All of the information from journal was correctly transferred to ledger. We can say that all accounts have their correct balance in the ledger. No, we can say that as well. Only that the debit dollar amounts equal the credit dollar. That we can say definitely. So that is going to be your answer. Number C is going to be your answer. Only the journal is accurate, ledger may be inaccurate. That also I can say with the disagreement or agreement of the trial balance. So that is number C is going to be the correct answer. Which of the following mistakes will a trial balance most likely detect? Now, a transaction is not journalized. If you leave out the transaction, it will not go to the a ledger, so therefore that is not the correct answer. A debit balance is recorded as a credit balance. Now, that is a possible answer. Okay, we will just take the other. A journal entry is posted twice. No, of course, that if it is posted twice, that means the effect will be neutralized. Incorrect amounts are used in journalizing or posting. So if you have done that, then journals will be carried forward to posting. So we won't basically know. Failure to record a transaction from the source document. That one, of course, definitely no, because you leave out the entire transaction, so it will not be captured in a journal or a ledger. So the best possible answer is B. So that is how we will understand about the journals, ledgers, and the trial balance now. So that brings to an end to the video series for this chapter. Now I'm going to do a demonstration problem, comprehensive one, which we start with the journal, then we go down to ledger, and we prepare unadjusted trial balance. So that will be the next video that I will be working on. So I'll be seeing you in that